What's up, YouTube? We're back with another episode of the Growth Tape. There are a few things I want to talk about. For starters, we got the market melting down, everyone's panicking, and honestly, I don't know why. I really still think it might be about the bond yields and, our debt, all that stuff. I've said it before. I don't believe it actually matters. People are always going to hype up the debt and be like, this is a major issue, but the truth is, I really don't understand the difference between 40 trillion in debt and 10 trillion in debt. No matter what, it's an amount that we're not going to pay back. And so as long as they keep raising the debt ceiling, yes, ultimately inflation will go up, but so will wages, and it kind of all offsets in my opinion. Maybe that's big uh a big hot take, but it also might just stem from the fact that I've grown up my whole life, and since the moment I was able to count to 10, the debt was already at like 7 trillion, I feel like. And so it's always been a talking point. And so when you go from 7 trillion to 40 trillion to then maybe probably one day at 100 trillion, I really don't think, like we're just going to keep printing. It's just how the dice rolls. What's up, Danny? So anyways, I'm not going to yap about that shit cuz honestly, I do not care. But I do want to talk about hymns. Oh, it's going down pretty good. Pretty much when you look at like what's green, it's like your staple companies like Pepsi, and then you got like Google, Amazon, Nvidia, of course, is like the only Mag 7 I'm seeing that's red, and that's mostly because of earnings. Like I'm very confident that's just because of earnings. The only Mag 7 I can't look at right now is Tesla, and they might be red. Yeah, Tesla's red too. So that's the main reason, honestly, the S&P doesn't look that bad is you have all these Mag 7 companies up, but pretty much everything else is red. And even when you like look at these charts, as much as people are like freaking out, is like each chart is like super constructive. You're above the 20-day. You tested the old all-time high right here, and they're bouncing off of it. Hims is gonna be a bit uglier, just because of the news, and we're gonna get right into the news here soon. But with the increased cancellations and them getting put on Visa's list for what's the term I want? Pretty much people trying to get their money back. Um, they're collapsing. SoFi is one that people are worried about, but just like look at this chart. That bull flag, the TA guys would call it, looks beautiful. It's just curving up. You got the 200-day coming down right here at this resistance. And my guess is it's probably going to meet both around there, get rejected, probably come back down maybe to like 17, test one last time, and then probably go, if I took a guess. And that will all probably happen around the Clarity Act, which is on the 15th, and rate cut decision, I believe, is the 16th. So, kind of a coincidence right there. But that's why I say, like, I think I'm not like the biggest TA guy, but I think the biggest mistake TA guys make is they look at a chart and they read it like it's scripture. And it's like, this is what I see, so this is what's going to happen. But they never actually take into account current sentiment in the current fundamentals and growth. So the common thing, like I posted earlier, was about Zeta. And the dude was calling for $10. But it didn't even go to $10 in the peak fear of the Iran war. So what catalyst is sending this thing that's finally, you know, getting a bid back to $10? You would need a complete sentiment shift, like SAS is dead, like Anthropic and whatnot is proving like there's no need for SAS at all, no matter what you do. Um, you would need like a complete SAS is dead, or you're like in a recession, because this was Iran war. This was also SAS is dead, and Leopold is forexing and shorting SAS, and you still could not. You could barely crack 15. So if you were gonna go to 10, it would have happened by now. And so that is my biggest issue with these TA guys is they say the chart it looks this way, that way, but they don't actually take into account also that going down to $10, you're looking at like a I mean what? We trade at $28 now, so $14 would be like 3.5 billion. So you're looking at like a 3 to 2 some billion market cap there with a company that's gonna do 2 billion in revenue this year and is profitable. It does not make sense. So, anyways, off that rant because I talked about it a little bit last stream. So I wanted to start. I want to talk about hymns a little bit. I want to talk about SoFi, a little bit of Zeta, but there's not as much news there. And I also want to touch on AppLovin a little bit. I just made a post about them, and they're really starting to intrigue me. As you can see, it's moved up quite a bit on my watch list. Um, so yeah. First off, I want to talk about the hymns thing. So I went over a little bit in my last live stream because there were already talks about with the FTC lawsuit that there wasn't transparency with pricing. And so I wanted to go through and I wanted to figure out, okay, how transparent is HIMS truly about their pricing? And I can pull it up right now because someone was showing me that their argument was it was pretty transparent. Somehow they got it to show the membership cost and then the actual prescription cost. I'm not sure how they did that. Maybe it's because they already have a set account made and they've done all the questions and they're an actual customer and the prices are more clear once all that stuff is done. But you have to understand from someone who doesn't have a membership, doesn't have the app, I just simply went because I wanted to go look and I was curious. And I feel like that's the boat a lot of customers are probably in. So if I just go to the site, and so this is the home page, and naturally, I'm here to get a GLP-1. So this just says see how much weight I can lose. This says start your weight loss today. And so I think common sense thing to do, start weight loss today. I want the pill, and then I'm gonna say improve my health, and click next. And after I click this question, it will take me to the medications. And so I can click get my plan, and that's going to make me go through all the quizzes. Or if I click get started, it says from $149 a month or more. And if I click view details, it just tells me, to get started. That's going to make me start answering questions. And then if I go back, and once you get to the questions, it makes you fill out like your address and whatnot, which that's kind of when I stopped doing it because I'm like, all right, I don't want to accidentally get myself billed. Okay, it's gonna make me go back. Let me re-click this. But I do think they added something because hold on, I just noticed something for the first time. This, click that. I think I noticed something about the subscription down here. So right down here it says price includes medication only if prescribed. An active HIMS weight loss membership is required. $39 first month. Auto renews $149 a month thereafter. Membership is billed separately and does not include or guarantee a prescription. Medication is not available without a membership. Membership fee is not included. So essentially, I think what they're telling you is you're getting billed for the membership, and then they'll go ahead and you'll go through your pretty much your visit with the physician or pharmacist via your online, and then they will tell you if it's right for your health, but you still get billed that membership because you still took that online visit. So even if they're like, yeah, this isn't good for you because you have whatever health issue, so you shouldn't take it, maybe then they push you somewhere else. But I don't know if there is like no other option. I assume you still get stuck with that $39 first payment, which still is not bad because And that might be initially why they only charge you that much, is in case, if they're like, no, you shouldn't get prescribed this, then you're not getting paid. You're not paying 149 a month just to be told like, no, this isn't for you. But anyways, I did not notice this when I looked at it last week. I don't know if this is new because of the lawsuit and now the visa thing, but I did not notice this. But my argument, anyways, in which I don't, that doesn't bother me, is if you go to Roe's website, let me go to Roe. And I could do the same for Noom if you guys wanted to see that one too. Um, so they are actually offering me a offer right away. A new member promotion automatically applied to checkout today. Intro offer applied. I don't know what the offer was though. But as you can see, they make me go through with these questions, whatever. I don't get to see any pricing. And then they want my name, address, whatnot. It's the same exact thing, and they advertise. You see it all the time on TV. They advertise $39 first month, $149 after. They don't mention that the pricing is different. They don't mention that you have to get the membership, and that you have to get the drug, and that's gonna be two costs. And the issue with that, and why Hims can't just spell it out for you and make it known, like, okay, you they could advertise, okay, you're gonna pay $149 a month and $149 um, for the actual prescription minimal. So now you're looking at $300, and they can spell it out easy for you. But the moment a customer sees that, they are going to think automatically Hims is more expensive than Roe. They're going to go to Roe. They're going to go through the process and then find out at the checkout table, oh, wait, I'm actually paying just as much for this as I would for Hims. But at this point, you already put your address in. You already put your name, first name and last name in. And at that point, there's no point in turning around. You're paying the same amount for the same product. And very few, the average customer, they don't know what Hims is doing to go above and beyond to, make sure your dosaging is perfect, and the data that they have to make sure that your experience is the best it can be to the customer. That's like such a minuscule detail that they don't actually know until they're on the prescription. And similar, I gave the story, but my aunt, she actually was taking GLP once for a second, but she said that they made her feel so sick that she's never thinking about it again. But she doesn't know that, she didn't have to go into the doctor's office, get prescribed something, start taking it, and then, you know, not like it, and then go back and trying to figure it out. Like, there are actual telehealth companies that will track the dosaging you're taking and the side effects that you're feeling, and send you a new shipment right away. So that's the issue. Is Hims can be like, yeah, it's $300 a month. Reality. But people are gonna assume they're gonna check out at Row. If it doesn't work out at Row, they just cancel it altogether. Um. So yeah, if anyone wants to chime in on that, feel free to. I'd love to debate it, but it seems like every time the debate is there, nobody wants to debate it, and it really doesn't make sense. And there's this one guy, man, I'm not gonna lie, he drives me crazy because he argues Hims and pretty much this whole lawsuit against them, and then he wants to compare it to a company who doesn't even offer weight loss. I'm like, dude, just like, what are you talking about right now? But if we got nothing on that, I'm gonna jump into the SoFi thing. So a lot of people lately, um, I think there's been some confusion with the Clarity Act, and I'll of course do more research on this because it's a big talking point that's coming up, and a big reason crypto is running. But there's this idea and narrative that the Clarity Act is not bullish for SoFi, and that is because Anthony Noto has said so. Essentially, is what they say, and I think they're confusing something. So I've listened to just about every Anthony Noto interview, and kind of what I take out of it when he talks about it is he's not saying that the Clarity Act is not uh, bullish for SoFi. A lot of the times he's just talking about that it's going to increase competition. But secondly, he's worried about um, the non-bank issuers being able to create a yield off their stable coin um, through other securities where they're going to use, uh, their chartered bank license to develop that yield. It is true that there will be increased competition, but SoFi is the best regulated. That they have the bank charter, they can throw it in the bank yield, and yes, others can offer yields um through other trying to think of the word I want, just through other avenues essentially, and that's going to naturally create competition, but it's also going to create adoption. The more companies that are promoting this, the more aware companies are going to become of this solution, if not already. But the quicker adoption happens, the quicker companies are going to feel forced to adopt it to keep their advantage and their edge, and being able to transfer money and get yield from that money. That's valuable right there. So I think one, it's going to quicken adoption, and I think Anthony sees that too, and that's why, although he says it's going to increase competition, he continues to back it, and he continues to be bullish on it, and he continues to bring it up in interviews, and he wouldn't do that if he really thought it was bad for the company. And this is what I need to look more into is um I've I know it's made to allow enterprises um adopt crypto and stable coins faster. It's more about creating the guardrails for them. Now, exactly what guardrails they don't have now that they're gonna get with it, that's what I have to do more research on. But I know that is the big talking point and why people talk about SoFi USD. SoFi USD has not taken off because a lot of these enterprises are not adopting stablecoins yet. They're waiting for the Clarity Act, and I think it's this idea of they adopt it and it can be rug pulled from them. And so you're waiting on that legislation. I think that's a big reason we've been seeing SoFi pump lately is that really starting last week is when we start getting word that, okay, this Clarity Act is gaining a lot of momentum. It's looking good to pass. We've seen Bitcoin run on this, and now we've seen SoFi and Robinhood run on this. And Robinhood, of course, they're one of the biggest crypto players there is. And so it's caught a lot of momentum, got back above triple digits. Very good for them. And yeah, so that's kind of all I wanted to say on that is um I think people are confusing how Anthony Noto actually feels and actually believe like this is bearish, but everything that I go to and the market's telling you is, this is not bearish. This is simply just like a misconception because the more enterprises that adopt it, the more who are going to start using SoFi USD, leading to higher deposits, and SoFi can get some of that yield. So that said, which actually I'm gonna pull up right now. I want to see SoFi, or no, it's not on that. RWA. We can see what this market cap looks like now. SoFi. USD. Oh, I spelled it wrong. Yeah, it's right here. Okay, market cap went up a little bit since I last saw it. Not much, though. Last I saw it was at 310. It's now at 312. But this is what I'm saying. We're kind of just flatlining since launch. More companies are going to start adopting it. The more enterprises kind of get that green light to go. Yeah, I'll do some quick research here on stream for you guys. So what is what and the Clarity Act is allowing enterprises to adopt crypto faster. Last I knew, it was something about your legislation being able to change and them having to pivot again. I think it's more just to like actually create the groundwork and make it more set in stone. Something that like the next administration can't just flip on them, um, and then have issues with going back to the old payment rails or payment systems. See what sources it gives me right here. So it says, all right, here we go. The biggest thing is the Clarity Act for enterprise adoption is that it would turn crypto from the legal gray area, which is kind of what I was talking, into something a bank, fintech, or a large company can build around with a defined regulatory framework, like I was saying. It draws a clear SEC versus CFTC line. The legislation creates a category of digital commodities and gives the CFTC a defined regulatory framework for exchanges, brokers, and dealers dealing in them. That reduces the risks that a company launches a crypto product and later gets told the asset or activity should have been treated as a securities business. The SEC/CFTC have already issued important interpretive guidance in 2026, but Clarity would put much of the market structure framework into statute rather than leaving it dependent on agency policy. It makes secondary market crypto much easier to handle legally. Section 203 says that when a digital commodity originally associated with an investment contract is subsequently sold by someone other than the issuer, that secondary transaction generally isn't treated as a sale of the original investment contract. That's huge for exchanges and financial platforms because it provides a clear route for ordinary trading without every transaction potentially falling into securities law. Banks get much better custody at economics. This is one of the most important enterprise provisions. Section 310 says regulators generally couldn't force banks, broker-dealers, and similar institutions to put customer crypto held in custody onto their own balance sheets as liabilities, nor require them to hold capital against those customer assets except for operational risk purposes. What this means, we can custody 5 billion of customers' crypto without effectively having to treat 5 billion as if it were our own balance sheet exposure. Okay, and it explains financial. Okay, there is a pathway for firms to start operating while the full rules are being built. Section 106 establishes provisional registration for digital commodity exchanges, brokers, and dealers where the CFTC, instead of enterprise potentially waiting years for every rule to exist, qualifying firms could register and operate under an interim compliance regime. Okay, can we technically? It's kind of yes. So kind of like exactly what I was just saying. It's creating the guidelines for us, and as these guidelines are created, more enterprises are encouraged, um, and that's going to lead to more SoFi USD customers. So that now being said, I want to jump over to my Zeta topic if anyone doesn't want to chime in on that. And I can just answer questions near the end. And so Zeta, we've been trading at like 30 bucks for, or not 30 bucks, but in this $28 range for a minute. I'll even change my camera. And man, the chart looks beautiful, man. I really do still think that we might go and test this 2576 level. And it's not a bad thing if we do. I want to see it? Honestly, not really. I want to keep going up. But and 25, yes, it would hurt my eyes a little bit, but it would also be healthy. And man, we're creating this bull, and I really think we can get to $38 by the end of the year. And so the question becomes, what necessarily is going to be the catalyst that gets us there? And so first off, I want to say I think the chart momentum enough is good enough to get us there, as long as the execution stays where it's at. I mean, you have average price target above $31. Um, the company, they're executing, they're growing, they raised their core organic growth targets. Um, I think their organic growth is going to be off the charts come Q4. I think they can do 2 billion in revenue this year. That right now they're guiding for 1.92. I think they hit 2 billion. Uh, and what is the catalyst that gets us to break out? Well, I think naturally it's just gonna get into the 30s. It doesn't really need a catalyst. Maybe there's probably gonna be some sort of quote unquote reason. It might be price target got raised, like something stupid and small, uh, not even fundamentally done with the business, or the I guess last ditch effort. Maybe we chop here for a little bit. September, October not doesn't tend to be the best month, but Zeta Live could be the reason we start rocketing again. Because as I've predicted in the past, I think that we are going to get Athena 2.0 for Zeta Live. David Steinberg talked about having a unveiling at this Zeta Live event, and I think it's going to be Athena 2.0. He loves showing off Athena. It's his favorite thing to do. Like, I think if you asked him what he likes to do on his Sunday, he'd probably say showing off Athena. Like, it is this guy's favorite thing to do. And he mentioned it on the call that they were going to unveil something new. They have Nick and Ronnie showing up to the event. They have, I believe it's Kevin Hart at this event. Um, I think, and they're going to have a ton of clients at this event. And so I think it's going to be Athena 2.0, and we are going to see our first version of Agentic Athena. I think we are going to see Athena be able to actually deliver like tasks for you. You know, Athena, I wanna know the 50 best places to build my hotel chains at next to competitors. Create me an action plan. Then Athena will deliver that action plan. You give it a yes or no go, and your team delivers on that action plan. I think we're going to see this be worked on with the marketing team. We already know it does some AI marketing tool stuff. I remember seeing that in one of the tutorials that they did. She pulled up some of the best ad campaigns for the certain advertising or best ad creatives that they did for an ad campaign, and it picked which ones they thought were going to be the best performing. Maybe we actually see it decide which ad creatives for which campaigns and actually launch them by themselves. There's a lot of things that Agentic Athena could do, but I do think that is what he's hyping up already. I mean, we're talking about this call was in the beginning of August. Like, he's already letting you know, like, we got something big coming. And when talking about it, he said, you know, right before he was hyping up the fact that they are creating tools, uh, they're creating AI products through vibe coding or, agents that used to take them months to do and now takes them hours and days to do. So fact he was talking about those two things back to back. I mean, it could be another tool that they're using in house that he just thinks is really cool. That's a definitely a possibility. Um, but I really do think this might be Athena 2.0. So I'm excited to see what that kind of ends up being. But yeah. So that's my little tidbit on that. I want to know if what you guys think it might be. It would be cool to get your guys' opinion on that. But the fourth And final thing I want to talk about is AppLovin. So AppLovin, it grew 50% year over year last quarter. It's getting absolutely punished. Absolutely punished. It is now, it broke $300 a share today. It's now back above $300 for the time being. Uh, the chart looks disgusting. I mean, let's just zoom into this so you guys can see it nice and clear. It's just bleeding. New lows today. Um, and you still have this falling knife look with the moving average lines. And so, you're kind of looking for that high volume bounce to kind of like mark that bottom. We haven't got it yet. And if I go over here, you know, where was it? Yeah, it was kind of looking right here. Right here looks like maybe you have a little bit of a shelf here and it sticks at 280 because it's definitely lost some of its bleeding momentum. And margins are still good, revenue's still good. The management came out and said, the only reason we barely, like, we're not even talking about like they missed bad or something. They barely missed revenue. And the only reason they said is because our Axon model was a little bit behind compared to where we thought it would be, and so we slightly missed on our revenue goal because we thought the model was going to be a bit more advanced. And they said demand is not slowing. It was completely a model guidance, and you know the guide still looks strong. They're still clearly taking market share. They told us that they don't want to get into open web quite yet because they don't see it as lucrative. They said we see more growth, more strong growth here still inside gaming apps and or gaming ads and working in these app stores that we're not doing the open web stuff yet because we have more growth ahead. And then even once they finish that growth, and they said if we launched open web, these companies would just take money that they were going to give us inside these apps and just move it to open web. So there's no point in doing it because they can just keep giving it to us inside the app stores for now because there's more to be had. And so they just told you, you know, we have more growth ahead. After growth is fulfilled here in the app stores, we have open web next. And not only do we have open web next, we've mostly been in the mid-market size with companies, but then they want to go for larger enterprises. Um, so this sell-off just seems ridiculous because if I really look at it and if they just grow at like the market rate of like 10%, like you can still justify this price. I mean, you're talking about a PE of, I mean, you have to assume margins stay strong, which is what I'm doing, and I think that might be where the market might be overreacting a little bit. But based off those comments alone, like we're not going to see this. I'm just trying to take bear case scenario. So assuming market margins stay the same and they just grow 10%, and let's say it's because they want to maintain those margins, is why they're going to now grow at like 10%. I mean, you're looking at $4 of EPS next quarter, which will be a new, all-time high of profitability. Um, and then if I can find it real quick, they trade at a trailing 12-month PE. Hold on. Okay, yeah, they trade at a 23 PE, and they grow 50%. That is ridiculous. And then they're um and I'm doing trailing because I'm being generous and I'm not going to give you the forward if that's what they want to say where growth is going to go down. But if you look at what they're estimating, I mean, $15 of EPS for 2026. Right now they're like $13 and then $20 for 2027. I mean, their forward PE I think was like a 13 when I looked at it. And if you go to price to sales, you're looking at price to sales a 15, which for their growth is, not not expensive. If they're growing 50%, if they, grow revenues by 50%, I mean, I'm not the best at math, but I think you just cut the price of sales in half and you'd be at 7.5. I mean, correct me if I'm wrong, but I don't feel like doing that math right now. Hold on. But yeah. So AppLovin's one I'm looking at getting into. I just want to wait for the chart to pan out, and some people, you know, they're not like that, but I've bought enough falling knives in my days where it's like I can wait for a bounce. I can wait for it to kind of like trade in between the moving averages. Like I don't care if I buy at 280 to 300. I just don't want to buy at 300 and for some ridiculous reason it goes to 240. And that's my mindset. So I'd like to see a bounce, see it actually start to, create a base, and then from there, as I observe and see everything the same, kind of get in. Because at the same time, think about it like this: is it really doesn't have many catalysts till next earnings because the concern is around growth. You're not gonna know their growth until next earnings, and so why rush to get in if I really don't see anything that's gonna send this thing higher outside of just the market clearing up? But if the market clears up, I think Zeta's gonna run. I think SoFi's gonna run. I think HIMS has a chance to run, although it always has its own regulatory risks and whatnot. So I can't say full 100% that one would run too. But I have so much exposure in SoFi and Zeta already. Like if it's just a market rally, like I feel well positioned to still take advantage of it. But we also already know September and October, those are usually down months. And even November, it's not really till December you get that Santa rally. So you also have tax loss harvesting, and when you look at this thing year to date, let me see. I don't even think it's up this year anymore. I think technically now it's gonna become a tax harvesting play. So AppLovin stock, uh, 1 year. Yeah, it's down this year, a good amount. I can't do the exact math because for whatever reason on Safari or web browser it doesn't give me a year to date option, but it's down from like 600, 700. Yeah, it's down from like 600 to 700 down to 1 or 2.99 now. So now you have it's also tax loss harvesting prospect, so you could get even more blood towards the end of the year. So there's no reason, in my opinion, to rush into this. I may, if we can start flatlining before next earnings, in which I think that could be a prove it point, I'll buy some. We could still honestly see dump, especially if like, it could be something dumb. Like margins could go, I don't have the exact number, but margins could go from like 69% to like 67%, and the market could just run with the narrative. Oh, their margins are getting weaker, and they could have still grown like 50% too, by the way. But they'll just run with margins are weaker, this and the other pricing power, and dump it, and then it still stays a loss harvesting prospect for all I know. So yeah, I'm actually getting quite bullish on this one. I'm excited to see what happens with it. Right now, my main concern is I've been open about this. I use margin. I'm trying to get off my margin. Um, I could easily get off my margin now. The margin I had, I used it to buy Zeta at 17 bucks. I could sell those shares I bought on margin, be up a good amount, and just call it good. Problem is, I want Zeta for the long term, so I'm just letting my cash secured puts get me off of it over time, because I'd rather have those Zeta shares from 17 bucks than sell the Zeta shares just to buy AppLovin here. I like that, you know. So that's just my opinion on that. So that being said, I pretty much covered everything I wanted to talk about. Anyone who tuned in, thank you guys for tuning in for a little bit. Thank you for hopping in here for a little bit, Danny. I don't know if you're still here, but thank you for hopping in. I enjoyed chatting. And that being said, we have some more stuff coming. I've talked about it in the past, but I'll bring it up a little bit again. Starting this Sunday, we'll be doing TA Sundays. Um, and I'm gonna be doing it with Knotspool. For those who may or may not know Knotspool, I'll pull up his X here real quick. He's pretty big on X. He has about like 123,000 followers last I knew. So you guys, a good amount of you guys definitely know about him. It's hard not to. He puts a lot of good TA work in. And he was one of the first to really actually support me as a creator. I hope this zooms in enough. I don't want to click something wrong, but yeah, I hope you guys can see this. But he's a very good creator. Go check him out if you haven't yet. Go give him a follow. But we'll be doing TA Sundays with him. We'll go over some of retail's favorite picks. And then we'll have like a donation option for any tickers that like other people want outside of what we schedule. But we'll be doing a lot of the popular ones, such as like, you know, the three companies I hold and I talk about, of course, SoFi, Zeta, Hims, and then do some other ones such as like Iran, CoreWeave, maybe some like APLD, um, maybe Oust or Ouster, however you say it. So some of the one like smaller names people are big fans of, but also the ones I cover a lot. Any that he also maybe catches popular to do, I'll have him do them. But then the rest, his segment will probably be around 30-ish minutes, and then we'll leave the back half of the show for anyone to donate for a certain ticker that they want to see. So, that being said, thank you guys for tuning in. I enjoyed coming here and rambling for a little bit. I wanted to make the stream a bit earlier. Usually it's gonna be like 5:30. Made the stream a bit earlier because it's my birthday and I wanted to spend it with my family. But I appreciate anyone who did come in here and spend today with me. And that being said,